All right, so I figured I'd upload a video sort of laying out the case for why I believe we're currently in a consolidation market rather than a bear market. First thing to point out is this rapid price expansion over here in October. In October, we see Bitcoin sort of hit that parabolic phase, and you can see here it had this brief retracement in autumn of 2020, and then it begins its 5x parabolic move. And I outline this here just to sort of, give a frame of reference for the type of move somebody can expect from a parabolic run in Bitcoin. So we have our 5x here, a little bit of a pause here, and then on the lower time frames, of course, here too, around the all-time high, there's, if you were to go down into the low time frames, you could see multiple price swings there. But when we have a higher time frame pause here, but ultimately we get that last leg goes up here on the into February, March, April, and during spring of 2021, that's when we see the parabolic rally start to fade out, and we start to get a little bit of a distribution pattern set in. Now, this, I think it took a lot of people off guard because people sort of approach the market with the expectation that Bitcoin parabolics always blow off and that they wouldn't encounter a distribution pattern. Well, of course, if everybody's expecting the same thing, well, then, the market generally doesn't give it to you. So here, after that 5x move, we enter this multi-month distribution pattern. We have this February high, this March high, this April high. This is standard Wykoff distribution over at, on the high time frames. Now, people may have been looking at this with the higher lows here as an ascending triangle. But the thing is, you have these multiple breaches of liquidity, failure, again, failure. Coinbase IPO goes here, runs up, liquidity, comes back down, breaks market structure. That break of market structure is sort of where you get your confirmation that this is in fact a distribution pattern. So market structure breaks, and then we see price go down, bounces a little bit. If you go to the Glassnode inflow to exchanges, you can see here as we have that distribution pattern and comes down and breaks the structure of the pattern. As that's happening, you can see the Bitcoin total coins flowing into exchanges starts to pick up, right? It has this low period of complacency during the distribution, and then when structure starts to break to the downside, then we see this coin flow pick up, and then you got your bearish retracement. So price runs down, relief rally, into a bearish retracement, and sells off 50% pretty damn quickly within the span of about 2 weeks, which is insane. But now I was in this trade. I caught this retracement, but I exited the trade way too early. I think I didn't have any idea, and a lot of people didn't have any idea that this type of capitulation was going to happen. But either way, that's what we got, and that's what we had to deal with. And so we have this multi-month distribution pattern, bearish retracement, 50% correction. And then in the summer of that year, we see the exact reverse, or the exact flip side of that type of scenario with your typical Wykoff accumulation pattern. So you have your capitulation low, high, higher low, lower high, breach of liquidity, then another breach of liquidity. Volatility is picking up. I'm reaching for liquidity on both sides of the market. Then another low, breach of liquidity, heavy accumulation here. Bleed up, bleed down. There's your spring, your Wykoff spring. Essentially, your swing low and the significant low we would look at the high time frame. So with that in mind, you've got this, these multi-month distribution patterns, multi-month accumulation patterns. That sort of gives us a framework to view the high time frame chart from. So then if we go to a weekly, let's see, we can see these levels a little bit clearly, not as well defined as a daily, but so then you have your high here was marked by the Coinbase IPO. Then you have this consolidation within the range, comes up, breaches new all-time highs. I think this is the day that the Bitcoin ETF in America went live. The futures ETF comes up here, runs liquidity, comes back into the range. And then I think here we had in November we had a major macro situation going on at the Fed. November 2nd, November 3rd, FOMC meeting. This is the day where the Fed sort of announced their change of stance and their intention to raise interest rates, or at least threaten to raise interest rates. So we got to demark that right there, because that is very significant. You do see one more breach of liquidity before the ultimate sell-off, but the response to the Fed's words and intentions here is pretty clear in the market. You do have that one little move up to grab liquidity, but then you have your pretty distinctive move down with very little relief rallies. I mean, this is heavy order flow right here. Demarked by, if you mark out each bottom range like this. Let's see. And this, you can see that, price, as it's moving in this downtrend, it never really put in a rally to test any of these supports turn resistance. It just, maybe a little bit of a dead cat bounce at each support, and then ultimately go lower. That's heavy sell volume right there. But let's move these off the chart. Mark the FOMC. So now we sort of have our macro range to work with here. And the point of this is to sort of lay out the case for why this low is not that significant in the macro sense. We had our highs in April, lows in spring. Price comes up, sets a new higher high in the macro. The Fed announces their intention, and then we move lower to the lower side of the range. And now we're operating on you can mark off this level here, this high of this July trading week. This high, once this high was broken, that's your swing low, run for new highs. We come back to that level, test that level, and go down in lower time frames. You can see that obviously this level is in fact acting as support. Come down, test it. Better seen on a lower time frame. Come down to that level, test it, come up, break market structure, and put in a little bit of an accumulation range, and then run up and test this, fill this gap and test this resistance up here. I mean, it's not perfect, but you can represent it by here. You also want to mark off these highs up here, but it just sort of gives you a framework that, yet we have tested the macro resistance. It had, buyers have stepped into the market, push price upward. So we can look at this level as pretty significant high time frame support. And after seeing this type of response off this level, then we can, say with a good deal of certainty that if price comes down and revisits it, that it's likely to get, a pretty significant response.